Apple is asking China for help after memory. Prices jumped 98%. In just 3 months, the price of a basic memory chip jumped by 98%. That is not a typo. That means the price almost doubled for the same small piece of metal and plastic that has barely changed in years. And the company feeling the pain the most is the one company everyone thought was too big and too rich to ever get hurt by something like this. Apple. The same company that builds some of the most expensive gadgets on the planet just admitted it could not protect its customers anymore. So it raised prices on MacBooks and iPads right in the middle of selling them, something Apple almost never does. But here is the part that should really catch your attention. To fix this problem, Apple is now asking the United States government for permission to buy memory chips from a Chinese company that the Pentagon has linked to China's military. Yes, you read that right. One of the most American brands on Earth might end up using parts from a company that Washington has been watching closely for years. How did things get this bad? And why would Apple even think about taking a risk like that? Let's get into it. The day Apple blinked on June 25, 2026, Apple did something it almost never does. It raised prices on a huge chunk of its products all at once in the middle of a normal sales cycle. No new features, no new design, no bigger screen or faster chip, just higher numbers on the price tag for the exact same products that were sitting on shelves the day before. The cheapest MacBook, called the MacBook Neo, jumped from $599 to $699. That is $100 more, overnight, for a laptop that did not change one single bit. The MacBook Air, one of Apple's most popular computers, went from $1,099 to $1,299. That is a jump of $200. iPads went up too. So did the Apple TV and the HomePod speaker. Even the Vision Pro headset got more expensive. The only major product that did not move was the iPhone, at least for now. Apple did not hide what was happening. The company came right out and said it had been trying to protect customers from rising costs for months, but it had finally reached a breaking point. It simply could not keep absorbing the extra costs on its own anymore. And the company hinted this was not the end of it either, warning that more price changes could be coming to even more products down the road. There is also a sneaky second piece to this puzzle that most people miss. Apple's newest software features, the ones built around Apple Intelligence, need a certain amount of memory just to function at all. Some industry trackers expect almost every new iPhone going forward to need at least 12 gigabytes of memory to run the newest version of Siri properly. That means even older iPhones still being sold might not be able to handle the newest features at all. So, while the memory shortage is raising costs, it is also quietly giving Apple a second reason to push customers toward newer, pricier hardware just to keep up with its own software. To understand how serious this is, you have to understand how rare this kind of move is for Apple. This is a company famous for planning years ahead. It signs huge supply deals long before a product ever launches. It usually knows exactly what a chip, a screen, or a battery will cost months in advance. Apple has only raised prices on individual phones before, like a $100 bump on one iPhone model last year. It has never raised prices across almost its entire lineup at the same time, with zero warning, weeks after those products went on sale. Wall Street noticed immediately. Apple's stock dropped more than 6% on the day of the announcement. That was its worst single day in over a year, and it wiped out a huge amount of value in just a few hours. When a company as massive and as carefully run as Apple suddenly loses control of its own pricing, investors get nervous fast. Apple's CEO, Tim Cook, had actually warned this was coming just days earlier. He told reporters that the rise in memory chip prices was unlike anything he had experienced in over 40 years of working in this industry. He called it a 100-year flood, meaning this is not a normal bump in costs. This is the kind of event that is supposed to happen once in a century, not something you expect to deal with during a normal year of selling laptops. So what exactly is flooding the market and pushing prices this high? That is where this story gets a lot bigger than just Apple. Before we go there, if you have ever wondered why tech prices suddenly jump for no obvious reason, this is exactly the kind of story this channel breaks down piece by piece. The real money and power moves hiding behind a normal-looking headline. Hit subscribe now, because the next part of this story explains why almost everything with a chip in it, not just Apple products, is about to get more expensive this year, and you will want to understand it before you go shopping for your next phone or laptop. Where all the memory went to understand why prices are exploding, you need to understand what memory chips actually do. Think of memory like a notepad sitting right next to a computer's brain. When your laptop or phone needs to remember something quickly, like which app you have open or what website you are loading, it scribbles that information onto this notepad instead of digging through a slower, deeper storage drawer. The faster that notepad works, the faster your whole device feels. For years, this notepad technology, called DRAM, was treated like a boring background part. Prices for it usually went down over time, the same way televisions and calculators got cheaper every year. Companies barely thought about it. Then artificial intelligence showed up and changed everything. Training a giant AI model is not like running a normal app. It needs to read and rewrite massive amounts of information over and over again, thousands of times per second, across thousands of processors working together. To keep up with that pace, AI computers need an extreme, supercharged version of memory called high-bandwidth memory. It is built differently, it is far more expensive to manufacture, and most importantly, it earns the chip makers a lot more money per chip than ordinary memory ever did. Think of it like a bakery that used to sell simple loaves of bread for a small profit until a new customer showed up offering 10 times the normal price for the exact same flour, but only if the bakery used every single bag for that one customer instead. Of course, the bakery says yes. The problem is that everyone who used to buy regular bread from that bakery is suddenly left with nothing on the shelf. That is essentially what happened to ordinary computer memory the moment AI data centers started buying. So picture the three biggest memory companies in the world: Samsung, SK Hynix, and Micron. Together, they make about 90% of all the memory chips on Earth. Each one of them has limited factory space and limited time on their production lines. Every chip they make is a choice. Do they make ordinary memory for laptops and tablets, which earns a normal profit? Or do they make the supercharged AI memory that data center companies are begging for and willing to pay almost any price to get? The answer was obvious. They chased the AI money. Big tech companies started signing massive multi-year contracts, locking up factory capacity years in advance and paying huge amounts up front just to guarantee they would have memory chips when they needed them. Micron alone reported customer commitments worth $22 billion. That is the kind of number that makes a CEO reroute an entire factory's production line. The results showed up almost instantly in Micron's own earnings. In one recent quarter, the company's revenue more than quadrupled compared to the year before, jumping over 340%. Its profit margin shot up from 39% to nearly 85%. For a moment, a memory chip company was making more profit per dollar of sales than NVIDIA, the company that makes the most famous AI chips in the world. That tells you everything about how upside down this market has become. Meanwhile, the leftover supply for ordinary laptops, tablets, and gaming devices got squeezed harder and harder. Industry trackers reported that DRAM prices jumped as much as 98% in the first 3 months of 2026 alone, and they are expected to rise another 58 to 63% in the months right after that. Some people in the industry have started calling it Ramageddon, a nickname that sounds dramatic until you see the receipts. And it is not just Apple feeling this. Gaming company Valve recently launched a new gaming device called the Steam Machine, and it priced the top model nearly $2,000, higher than the company originally planned, and Valve openly blamed the memory shortage for it. Microsoft has been raising prices too. Computer makers like Dell and HP have also been adjusting their prices. This is not an Apple problem. This is an entire industry problem, and Apple just happens to be the biggest, most visible name caught in the middle of it. Think about who gets hurt the most by this. A company like Apple has huge profit margins built into every device it sells, and a massive separate business selling subscriptions and apps that keeps making money no matter what hardware costs. That gives Apple a cushion most other companies do not have. Budget phone makers selling Android devices do not get that same safety net. For some of those companies, memory chips can already make up 15 to 20% of the entire cost of building a single phone, on top of profit margins that were already razor thin to begin with. When memory prices double, those companies have almost nowhere to hide. Some analysts are now predicting overall smartphone and computer prices in the United States could rise by roughly 15% this year alone, across the whole industry, not just Apple. And there is no quick fix coming. Leaders at Micron have said publicly that they expect tight supply conditions to continue beyond 2027, with no clear timeline yet for when supply might finally catch up with demand. Executives at other major chip companies have given similarly gloomy outlooks, with some predicting real relief might not arrive until 2028. That is years of pressure, not months. Factories take a long time to build, and even when new ones come online, AI companies are already lined up to buy whatever new capacity shows up first. So Apple is staring down a shortage with no end date in sight. Faced with that kind of timeline, the company needed to find more options, and fast. That search led Apple somewhere it has avoided for a long time. Apple's secret phone call to Washington. Here is where the story takes a turn almost nobody expected. Reports from the Financial Times revealed that Apple has spent more than a month quietly lobbying the United States government, specifically the Commerce Department, along with other officials in Washington. The goal of all that lobbying is one specific request. Apple wants permission to buy memory chips from a Chinese company called Changshin Memory Technologies, known by its short name CXMT. CXMT might sound unfamiliar, but inside the chip industry, it has been turning heads for years. The company was founded in 2016, which makes it incredibly young compared to giants like Samsung or Micron that have been building memory chips for decades. Breaking into the memory chip business is one of the hardest things a company can attempt. It takes massive factories, near-perfect manufacturing precision, and years of trial and error just to produce chips that are reliable enough to sell. A tiny mistake in the manufacturing process can ruin an entire batch of chips. CXMT started small, building basic memory chips mostly for buyers inside China. But it kept reinvesting, kept improving its factories, and kept catching up generation after generation. By late last year, the company was already showing off advanced chips, including modern DDR5 memory running at extremely fast speeds, the same general category of memory used in today's newest laptops and phones. Some industry analysts now estimate CXMT could bring in over $50 billion in revenue this year alone, which shows just how quickly this once unknown company has grown. Many people in the industry now consider CXMT to be the fourth largest DRAM maker in the world, trailing behind the big three but no longer a company anyone can ignore. So why would Apple, a company famous for incredibly strict quality standards, even consider working with a chip maker that young? The answer comes down to leverage. Apple does not need CXMT to be bigger than Samsung. It just needs CXMT to be good enough and available enough to become a real second option. Even a modest new supplier changes the entire negotiation. The moment Apple has somewhere else to turn, the big three memory makers lose some of their power to set sky-high prices, because Apple is no longer fully dependent on just them. There is also a simple math problem behind all of this. Apple buys staggering amounts of memory every single year for hundreds of millions of devices. If even a portion of that order shifted to a cheaper supplier, it could meaningfully soften the financial hit Apple is taking right now. And if it became public that Apple, one of the most demanding buyers on the planet, trusted CXMT's chips enough to use them, that would send a powerful signal to the rest of the industry that this young Chinese company has officially arrived. CXMT has not exactly been sitting quietly waiting for that moment either. The company has reportedly received approval for a stock listing in Shanghai, which would bring in even more cash to pour into new factories. Inside China, plenty of homegrown computer and phone makers have already started shifting orders towards CXMT and its sister company, YMTC, instead of leaning entirely on Samsung, SK Hynix, and Micron. That gives CXMT a steady stream of domestic business even without Apple. But landing Apple as a customer would be an entirely different level of validation, the kind of stamp of approval that no amount of advertising could ever buy. But wanting to buy from CXMT and actually being allowed to buy from CXMT are two completely different things. That gap is exactly why Apple needed to start making phone calls to Washington in the first place, and the reason behind those calls is where this story gets genuinely tense. The company on a blacklist, CXMT, is not some random overseas supplier sitting outside of any political conversation. The Pentagon has placed CXMT on something called the 1260H list, a list of Chinese companies the Department of Defense believes have connections to China's military. Getting placed on that list does not mean a company is automatically banned from doing business with everyone in America. What it does mean is that any American company working with it takes on serious reputational and political risk. There is actually a much scarier list sitting one level above that one called the Entity List, run by the Commerce Department. If a company lands on the Entity List, American businesses legally cannot ship goods or technology to it without a special government license, and getting that license approved is usually extremely difficult. This is the list that creates real legal walls, not just political headaches. Here is the unsettling part for Apple. CXMT is not on that stricter entity list today. Technically, nothing is stopping Apple from buying its chips right this moment. But that status has been shaky. Earlier this year, in February 2026, an updated government list actually removed CXMT from the blacklist entirely, only for the Pentagon to reverse course after pushback from lawmakers who worried that was too soft a move. By June, CXMT was right back on the list. A company whose legal status can flip twice in just a few months is an incredibly risky thing to build a long-term supply chain around. That instability is exactly why Apple is not simply placing a quiet order and hoping nobody notices. The company wants something firmer than silence. It wants an actual green light, ideally some kind of written assurance, before it invests time and money qualifying CXMT chips for its products. Imagine spending months testing a new supplier, redesigning your manufacturing process around their chips, and then having the government suddenly slam the door shut right as you start relying on them. That is the exact nightmare scenario Apple is trying to avoid. And not everyone in Washington is thrilled about Apple even asking. John Moulinaire, the chairman of the House Committee focused on China, did not hold back his opinion. He warned that Apple partnering with a Chinese military-linked company would be a grave mistake. Lawmakers like him argue that allowing one of America's most powerful corporations to fund and validate a strategic Chinese chipmaker could backfire badly on national security down the road, even if it helps lower laptop prices in the short term. Adding to the tension, there are reports that CXMT, along with more than 100 other Chinese companies, already cleared the internal government review needed to be added to that stricter entity list, but simply has not been formally placed on it yet. That detail alone shows just how close CXMT already is to losing access entirely, which makes Apple's timing look even riskier. Asking for a green light right now is a bit like asking to walk across a bridge that government engineers have already quietly approved for demolition. It is also worth noticing what this situation says about the rest of the world, not just America. Europe, for example, does not have a single major company that makes DRAM or high-bandwidth memory at all. If a European company found itself in Apple's exact position, It would not even have the option of looking toward a backup supplier, friendly or not. That detail shows just how much power sits in the hands of a small handful of countries and companies right now, and why a request like Apple's carries weight far beyond its own balance sheet. Apple is genuinely stuck in the middle of this fight. The company sells enormous numbers of products inside China and depends heavily on Asian manufacturing for almost everything it builds. At the same time, Apple is one of the most visible and most scrutinized American companies on the planet, constantly under the microscope from politicians on both sides. A business decision that looks completely sensible on a spreadsheet can still become politically impossible the moment it lands on the evening news. Apple has actually been here before in a smaller way, quietly trying to spread its supply chain across more countries for years, shifting some factories toward India and Vietnam to reduce how dependent it is on any single nation. But memory chips are a different kind of problem entirely. You cannot just open a new factory for advanced DRAM the way you can open an assembly line for putting together finished phones. Building a memory chip factory from scratch takes years and billions of dollars, and only a handful of companies on Earth currently know how to do it well. That is exactly why a shortcut like CXMT looks so tempting to Apple right now, even with all the political baggage attached to it. So Apple is walking a tightrope right now, hoping economics and politics somehow land on the same side. History suggests that is not always how these stories end. A bet that could backfire. This is not actually the first time Apple has tried something like this. Back in 2022, Apple explored a very similar idea with a different Chinese company, a flash storage maker called YMTC, hoping to use its chips for iPhones sold inside China. Apple moved forward with early discussions, only to shelve the entire plan after the previous presidential administration tightened export rules and lawmakers raised serious security concerns. Shortly after, YMTC ended up placed on the strict entity list, the one with real legal teeth, closing the door completely. That history matters enormously here, because it shows this exact situation has played out before, and it did not end well for the Chinese supplier or for Apple's plans. It is the clearest warning sign that Apple's current request, even if it gets initial approval, could still collapse later if political winds shift again. Interestingly, reports suggest Apple may also be eyeing YMTC again this time around. This time for flash storage chips rather than the DRAM chips CXMT would supply, which means Apple appears willing to take this risk twice over, not just once. There is another layer of uncertainty sitting right on top of all of this. Tim Cook, the CEO, who has been personally pushing this request and publicly saying that all options need to be on the table, including loosening restrictions on Chinese chip makers, is expected to step down later this year. Apple has already announced that John Ternus will take over as CEO in September. That means the executive who started this politically risky negotiation might not even be the one running the company by the time Washington makes its final decision. Even if the government does eventually approve the request, that would only be step one. Apple does not buy chips from just anyone. CXMT would still need to pass Apple's brutal qualification process, proving its chips can handle real-world conditions across millions of devices without overheating, draining batteries too fast, or randomly failing. Apple typically demands months of testing, security audits, and proof that a supplier can deliver consistent quality at massive scale, batch after batch, with zero excuses. Political permission only opens the door. It does not guarantee CXMT can actually walk through it successfully. Even if the government does eventually approve the request, that would only be step one. Apple does not buy chips from just anyone. CXMT would still need to pass Apple's brutal qualification process, proving its chips can handle real-world conditions across millions of devices without overheating, draining batteries too fast, or randomly failing. Apple typically demands months of testing, security audits, and proof that a supplier can deliver consistent quality at massive scale, batch after batch, with zero excuses. Political permission only opens the door. It does not guarantee CXMT can actually walk through it successfully. There is one more wrinkle worth knowing about. CXMT is already extremely busy. Demand inside China for its chips is so strong that some analysts believe the company is essentially selling out its production as fast as it can make it, even before Apple shows up looking for a deal. That means even a fully approved partnership might only cover a small slice of Apple's total memory needs at first, not the entire Mac and iPad lineup. So do not expect this to instantly fix the price problem either. Apple has already raised its prices once, and companies rarely reverse a price increase just because one new supplier joins the mix months later. The most realistic outcome, even in a best-case scenario, is that this stops prices from climbing even higher, rather than bringing them back down to where they used to be. So where does that leave us? Apple has not signed a deal. CXMT chips are not inside any Mac or iPad right now. This is still, at this stage, a request, not a done deal. But the fact that Apple is even willing to ask, knowing the political firestorm it could create, tells you everything about how serious this memory shortage really is. A company that spent decades carefully avoiding political controversy around its supply chain is now choosing to wade directly into one because the alternative, watching memory prices spiral even higher with no relief in sight, might be the bigger risk of the two. This whole situation is really a window into something much bigger happening across the entire tech world right now. Artificial intelligence is not just changing software and chatbots. It is quietly rewriting who controls the most basic building blocks of every device we own, and ordinary customers are the ones absorbing the bill at checkout. So, here is the question worth sitting with. If approving this request could bring laptop and tablet prices back down sooner, should Washington allow Apple to buy from a company tied to China's military? Or is that risk simply too big no matter how much money it saves? Let me know what you think in the comments. If you found this breakdown useful, tap that like button, hit subscribe, and turn on notifications so you do not miss the next part of this story as it develops. And if you want to understand more about how the AI boom is reshaping prices across the entire tech industry, check out our other videos breaking down the chip shortage from every angle.